So the next one is deduction in respect of scientific research. I hope part 1 depreciation topic is completed. Okay, part 1. If at all you did not watch part 1, please watch part 1 first and then come to this part 2 to Pgbp. No. So in depreciation, one point I forgot to mention. If you purchase any asset where if the amount is paid for more than 10,000 in cash, then on that asset you cannot claim depreciation. The actual cost is treated as zero. Only if the asset value is more than 10,000, if it is paid by other than cash, means account pay check, account pay bank draft, or any other permitted electronic mode, only then you will get deduction. Fine. Now coming to this one, scientific research expenditure. Getting it? Now we have these sections. Okay, we have a section called 35 and 35. Only one section, that is 35. Inside that, subsection 1. Getting it? This is dealing with direct scientific research expenditure. Nothing but if you spend directly for scientific research, whatever amount you are spending, you will get 100% deduction. So whether you are a normal person or a company, doesn't matter. You will get entire revenue expenditure 100% deduction, entire capital expenditure also 100% deduction under 35 subsection 1 clause 1. Now for capital expenditure, except land, you will get deduction. Not only that, before you started the business, past 3 years also you spent some capital expenditure. That capital expenditure also is eligible for deduction, 100%. Getting it? Then that, remember, the past 3 years expenditure is only for materials and salary. Getting it? Only on personnel, nothing but salaries and materials. In the past 3 years, if you spend revenue expenditure, that you will get deduction 100%. Capital expenditure, whatever you spend in the past 3 years before commencing the business, you will get 100% deduction in the year in which you commence the business. So the first year in which you started the business, you can claim 100% reduction of that year expenditure, revenue and capital. Last 3 years, revenue and capital, both you can claim. Are you getting it? Remember, land expenditure you will not get. Now there is another section 35(2)(ab) which is exclusively created for company engaged in biotechnology. Now here for land and building you don't get deduction, but for building there is a general section, no, 35. Under this itself you can claim. Once upon a time 35 subsection 2ab has a relevance. Now 35 2ab section don't have any relevance at all. Anybody whoever is directly incurring scientific research expenditure, they can claim directly under 35 subsection 1 itself. Next, not only that, if at all you don't have the capacity to spend, you don't have time to spend, you don't have time to research, but some associations are doing research, you want to donate them, you donated, you can claim deduction under 35. Remember, if you have Pgbp income and if you are donating to scientific research association, social research association, national laboratory, all these, you will get deduction under Pgbp. If you don't have Pgbp head of income itself, you can claim deduction under 80 GGA. There is a section called 80 GGA which is applicable for SSC who are not having Pgbp income, chapter 6A. If they are donating to a association, college, university for scientific research, getting it, or a company for scientific research, or for a college association for social research, or for laboratory IIT specified person for so and so scientific research, if you are donating without having Pgbp income, then 80 GGA. If you are having Pgbp income, all the donations for scientific research, social research, statistical research, 100% deduction you can claim. That's it. No need to discuss too in depth in this. No formalities, no confusion. Very simple. Are you spending directly scientific research expenditure? Yes, 100% reduction for revenue expenditure, 100% reduction for capital expenditure except land. Are you donating for scientific research? If it is an approved research association, if it's an institution which is approved for scientific research, whatever amount you donate, it is eligible for deduction. You are donating to national laboratory, IITs, 100% deduction. You are donating for social research, 100% deduction. That's it. So if you just read this table, that's more than enough. Next, 35AD. What is this 35AD is all about? This section is specifically brought to give deduction for certain businesses in respect of capital expenditure. See, any business, revenue expenditure, whatever they are incurring, they can claim deduction under 30 to 37. Revenue expenses they can claim. On capital expenditure, what they can claim is depreciation. But since some businesses which are of national importance, okay, which are promoting tourism sector, which are promoting health, which are promoting agriculture, getting it? So which are promoting infrastructure. So the income tax has identified 14 types of businesses. They have identified 14 types of businesses. I'm not going into these 14 businesses. Okay. So they have identified 14 businesses. If you started these businesses, getting the point, if you start any of these businesses, to start this business, you are spending so much of capital expenditure, right? Don't claim depreciation. straight away 100% of that capital expenditure you claim it as deduction. 100% you claim it as deduction. Remember, if at all you are opting for concessional tax scheme 115 BAC, 35 AD is not there. Further, if you claim 35 AD deduction, 115 JEE, AMT, alternate minimum tax provision will apply. Remember, keep this point. Okay, fine. So if you are doing any of these businesses, whatever capital expenditure that you are spending, 100% deduction you will get. Remember, you will not be eligible for land, goodwill and shares and securities. If at all you are buying shares and securities, financial instrument, nothing but goodwill or land, that is not at all eligible for deduction. Not only that, if at all any capital expenditure you spend 10,000 rupees extra, more than 10,000 rupees, single payment you paid in cash, you will not get deduction under 35 AD. In order to get 35 AD capital expenditure 100% deduction, you have to pay by other than cash. Electronic mode, account pay check, account pay bank draft. Getting it? Not only that, suppose you started business and after starting the business you are spending, you will get deduction. What about before starting the business I spent? Suppose there is a business called 2-star or above category hotel. 2-star or above category. First of all, I constructed the hotel. Only after construction I started hotel business. Yes or no? Right from the date of Bhumi Puja, can I do business of hotel? No. So even if the capital expenditure is spent before starting the business, that capital expenditure is also eligible for deduction. In which year? From the year in which you started the business, you can claim deduction for that capital expenditure also. Are you getting the point? By the way, in order to claim capital expenditure spent before commencement of business, in order to claim deduction for that, you must capitalize that in the books of accounts. You must capitalize. In order to capitalize, you must bring capital into the company. Able to understand? That's it. Now, first of all, this specified business, in order to start, you must freshly start. It should not be demerged from existing business. It should not be a second-hand business. In that business, entire plant and machinery completely should be new, completely new. Getting it? Up to 20% of the total plant and machinery can be second-hand machinery. And you know what? Under this 35 AD only, imported plant and machinery is not treated as second-hand machinery. Yeah, if you are importing from outside India, for the first time you are using in India, or first time we are claiming depreciation under section 32 of the income tax law. First time. Suppose you imported a machine from outside India. On that machine, nobody claimed depreciation under Indian income tax law and nobody used it in India. Then that machine is treated as new machine. Remember, for additional depreciation purpose, no, if the asset is imported from outside India or if the asset is purchased within India, somebody used it earlier. It's a second-hand machinery. Additional depreciation will not come on that. However, for specified business, no. Can I claim 100% deduction on that particular plant and machinery even though it is a second hand? Yes, if it is used outside India but not inside India, okay, and nobody claimed depreciation under income tax section 32 on that machine, it is treated as a new machinery. It should be outside India, it should be imported from outside India and no depreciation is claimed on that earlier. It's a new machinery for the purpose of 35 AD. But for the purpose of additional depreciation, it is always second hand machinery. It's second-hand machinery, not at all eligible for additional depreciation. Whether it is used outside India or India, doesn't matter. For 35 AD, if the asset is used outside India, it is treated as a first-hand machinery in India. Are you getting the point? That's it. And further remember, in order, now what benefit they are giving, whatever capital expenditure that you are spending, whatever machinery, whatever asset, whatever furniture that you are buying, everything is eligible for 100% deduction. Now there is a condition. The machinery or asset, whatever, in respect of which 35 AD 100% reduction you claim would know, that machinery must be used for 8 years consecutive for the same business. For the same business, you must use it 8 years. You know, if at all you are using this asset for any other purpose within this 8 years, whatever deduction given to you will be taxed as income minus for whatever the years you are using, you know, notional depreciation under 32 we will provide. Balance amount we will re-tax it under 35 AD subsection 7B. Are you getting it? Once you bought an asset for specified business, 100% deduction claim, some 4th or 5th year, you are using it for some other business, non-specified business. In such a case, whatever deduction earlier allowed, re-tax it minus depreciation, notional depreciation claim it, balance amount will be re-taxed. Further, this balance amount is treated as actual cost for the purpose of block because you transfer it to normal business. So in normal business, you need to add it in the block. Now, very simple. If any asset is purchased for scientific research, if any asset is purchased for specified businesses, single SSA, he is also having normal business. These assets, scientific research asset, specified business asset, don't add it in the block value. Able to understand? That's it. Now, Now here in 35AD7B and 35 scientific research, there is one point. Suppose no, I purchased an asset for scientific research, 100% reduction I claimed. I purchased an asset for specified business, I claimed 100% reduction. Now if I transfer it to normal business, what is the consequence? What is the consequence? Suppose I purchased for scientific research a mission, I used it for scientific research, 100% reduction I claimed. Now I transferred it to my normal business. So 43 subsection 1 explanation 1. There is an explanation 1. What it says, if any asset is used for scientific research and later brought into normal business. So now you need to add it in the block of asset value, right? How much value we will add in that particular block? 0. Actually the provision says actual cost minus deduction claimed under section 35. Getting it? So actual cost 10 lakh, deduction also I claimed 10 lakh, so 0. That is the provision. Suppose no, if any asset which is purchased for scientific research, I sold directly. I did not bring it to normal business. After using it for certain number of time period, after using it for certain number of days, I sold it directly. Whatever sale proceeds were there, right? Whatever sale proceeds were there, right? They will be taxed as business or profession income. 41 subsection 3 deemed profits. What is it? 41 subsection 3 deemed profits. It is straight away taxed. Are you getting it? Suppose no, if you bring into normal business, added in block 0, then you sold it. That sale value will be reduced from the block. See, once you bring it to normal business, scientific research asset, you will add in the block. After that you sold, which means you sold part of a block. Means the value of sale will be reduced from the block. So this treatment will not apply. When 41 subsection 3 treatment will apply, if you directly sell from scientific research operations, you directly sold, sale proceeds will be taxable under business or profession. Suppose you sold it for more than original cost. The excess amount beyond original cost is taxed as, capital gains. The amount which is beyond the original cost is taxed as capital gains. In fact, it is called a short-term capital gain. Very simple. Able to understand. Now, 35 AD. Suppose I purchased a mission or some asset for 35 AD from 10 lakhs. I claim a deduction 100%. Suppose for 8 years, I must use that asset for the same activity. After 8 years, if I sell also, no problem. After 8 years, I brought into my normal business. No problem at all. Within 8 years, if you bring it into your normal business, what happened? Earlier given deduction minus whatever number of years, claim depreciation. So balance amount will be retaxed. Balance amount will be retaxed. Suppose after 8 years, I bring it to my normal business, nothing will be retaxed. Now, when you are bringing scientific research, 35 AD item into normal business, what is the actual cost? 0. After 8 years. If you bring within 8 years, whatever you are retaxed, that will be treated as actual cost in the block. Suppose if I purchase an asset for specified business, I sold it. Whether you sold within 8 years or after 8 years, it doesn't matter. You sold it. Amount you received under section 28 charging section, whatever amount received is treated as Pgbp income. That's it. So this is 35 AD. I hope you are clear. So with this 35 AD theme, entire theme I told, except number what are the businesses I did not tell. Rest all other provisions I have covered. Even 35 scientific research also I have covered everything in depth. Are you confident? So with this 35 and 35 AD is completed. So now we are having another section called 35D, preliminary expenditure. Preliminary expenditure. So preliminary expenditure is whatever expenditure. Preliminary expenditure is something that we spend in order to start the business, or preliminary expenditure is something that we spend in order to go for expansion. Getting it? So an enterprise, before they go for expansion, they will have preliminary expenditure, or an enterprise when they are about to start a business, they will have preliminary expenditure. Now, under income tax law, preliminary expenditure is not deductible. Whatever you spent, there is a limit. 5% of cost of the project. So maximum preliminary expenditure can be 5% of the cost of the project. So a preliminary expenditure, suppose you spend 10 lakhs. Cost of the project is 1 crore. 5% means what? 5 lakh. So maximum preliminary expenditure permitted for deduction is 5 lakhs. And remember, the preliminary expenditure, entire amount 5 lakhs, whatever permitted, entire amount you cannot claim in single year. You have to claim in 5 assessment years in equal installments. So the preliminary expenditure, whatever incurred at the time of incorporation or at the time of expansion, will be restricted to 5% of the cost of the project only, and that amount further can be claimed as deduction only in the 5 installments. Further, in case of company, 5% of capital employed or 5% of cost of the project, whichever is higher. So this limit is there only for the companies. Suppose if it is a company which is spending preliminary expenditure, what is the maximum permitted preliminary expenditure? 5% of capital employed, 5% of the cost of the project, whichever is higher. Getting it? So actual amount, how much identify, compare with this. So actual amount is higher than 5%, then 5%. If actual amount is less than 5%, then actual amount total. Suppose if my preliminary expenditure is 3 lakhs, so permitted is 5 lakh, then 3 lakhs only can claim. Suppose if my preliminary expenditure is 13 lakh, but permitted as per law is 5 lakh, then 5 lakhs only I can claim. Remember, whatever is eligible, whether it is 3 lakhs or whether it is 5 lakhs, you can claim that in 5 installments only. Are you getting the point? From the year in which expansion is completed, from the year in which business is started, from that year 5 installments you can claim. Same 5 installments logic is applicable for any payment made under voluntary retirement scheme. So if any entity is paying any amount under voluntary retirement scheme, that amount is also eligible for 5 installments. Now there is another thing called family pension. Capital expenditure on family pension can be claimed as deduction by a company SSE in 5 installments. Remember, if any enterprise, if any business organization spend on family planning of the employees, that is eligible for deduction only for company SSE. Revenue expenditure, 100% deduction. Capital expenditure on family planning, only 1/5 of the expenditure. In 5 installments, you can claim 1/5, 1/5, 1/5. So capital expenditure on family planning by a company can be claimed as deduction in 5 installments. The section is section 36. Clear. Now in 36, there are many more deductions. So all business expenses, whatever comes under 30 to 36, except this, if any other business expenditure is there, you can claim deduction under 37. Under 37, what are all covered, you know? A salary expenditure comes under 37, electricity comes under 37, maintenance expenditure comes under 37, any general expenses, puja expenses, all that can be claimed under 37. Car expenses can be covered under 37. Able to understand? Stationery, you can claim under 37. Fines and penalty you paid during the course of business, you cannot claim because it's an offense. If you pay any amount for offense, you cannot claim deduction. Income tax, first of all, income tax is not a business expenditure. Income tax is something which is there for every SSE. Salaried employee income tax is there, capital gains income tax is there. So it's not something for business people. Income tax is general obligation for everybody. So income tax is not a business expenditure. I hope you understood. So with this 35 AD, 35D preliminary expenditure, 35 TDA VRS, and 36 1 or 2 points, and 37 1 or 2 points I've covered. So that's it. You see, very simple. These are deductions part. So with this, deductions part is complete. In the next video, I will discuss disallowance part. Getting it? Where I will give little bit focus. Especially, many students are having confusion on 40B, assessment of firms, partnership firms. So how to compute income for partnership firms? This many students are having confusion. So by the time you finish watching this video, 40B, 40A, 40A1, 40A1A, 43B, 40B, all these sections I will upload. After that, I will upload 44 series. So this is part 2 Pgbp. If at all you haven't watched part 1, go and watch part 1 and then come back to this. That's it. Take care.